Well, thanks everyone. I'm glad that I could come out here and join you today. And I'm honored to be here as part of the RevRoad family now. And so it's been great to work with everybody and get to know you all and to share this idea with you and to watch it materialize. It's really exciting for me. So I guess to give you a little background, a lot of you know, I've shared this story with a lot of you several times, but some of you are new. So I'll just go through it quickly again. So I've had this idea for a few years. It kind of started at the end of my time at Caesars Entertainment, and just had this idea percolating on how to develop risk management software specifically for the gaming space that could also be utilized in other industries, specifically for financial crimes risk management, like anti-money laundering, counter-terrorist finance, all that kind of stuff. And then over the time, as I gained more experience in compliance software and I had more experience in anti-money laundering, it kind of came to a point where I started putting out pen to paper. I shared my idea with a couple of people. They thought it was a really good idea. And then I started putting pen to paper. So over the last year, I've really developed the idea, started vetting it out, started getting into the details, shared it with more people, and it's generated a lot more excitement, a lot more forward momentum. And so I'm excited to be able to be at this point where we get to launch this idea, put our full effort into it, and make something wonderful happen. And so welcome to Kinectify. A little bit about myself. Just switch the slide here about the Kinectify team. One thing that's happened, slowly over the last year, and then it's accelerated over the last 3 months, is the team started materializing and coming together. And it's been really awesome to see, really great to see. And share a little bit more detail about myself. I started my career in the military, and I was always interested in international affairs, foreign languages and cultures, economics, and all of that kind of stuff. So naturally, my attention was turned towards the Middle East because of the security issues there. And so as I gained more education, I focused on political science, international affairs, languages, Arabic specifically, went to grad school at George Washington and learned Arabic, spent a significant amount of time in the Middle East doing that and traveling around. And then I always thought I'd end up in diplomacy or in US intelligence or something like that. And when those jobs came around, there was sequestration and budget issues and things, so they never materialized at the rate I wanted them to. And so I ended up in banking. And interestingly, the banks and financial institutions were moving a lot of money in and out of the Middle East. They were taking wealth management clients on from not just the Middle East, but other high-risk jurisdictions around the world. And so they turned to private intelligence companies, basically. Kroll and Exeger were two leading companies that were involved in that space. And so I got in with them after grad school, and I was on their due diligence teams doing all of these investigations. And it was a lot of fun because I got to use my Arabic, I got to use my knowledge of these high-risk areas like the Middle East, and be able to educate intellectual bankers that had no background in the Middle East. So you take these really complex issues and you need to simplify them so they can make a risk-based decision on what they were going to do. Are they going to take on this Saudi prince as a wealth management client? Are they going to ink this deal between Caterpillar and a partner in Dubai? And then really do thorough research, because that partner in Dubai might have another company down the street that they wholly own that's doing business with Iran, because the UAE has normalized relationships with Iran, but the US doesn't. And so there's all of these complexities that you have to really dig deep into to surface and then explain them in a straightforward and simplistic way so somebody with no background in the Middle East could understand it and make a risk-based decision. And I thought that was a lot of fun. And so I continued in my career. I worked with former OFAC officials, which is the US Sanctions Department, and we mapped out these terrorist financial networks around the world and advised top-tier financial institutions on terrorist financing and US sanctions and drug cartel activity, things of that nature. And then I ended up at Caesars Entertainment. And so at Caesars Entertainment, it was my first time going inside of the financial institution space or the gaming space, this risk management space. I was always on the outside doing consulting work. And so I took a few steps back in my career and started almost entry level. And I was like, I just want to gain this knowledge and experience. And so I jumped into Caesars Entertainment, and it was in their early days of their compliance program as they're developing it, and their centralized compliance program. And I saw the executive there, Ben Floyd, who's joined our team, and we'll talk about him a little bit. He's on the call today. And when I was applying to Caesars, I saw that he was the head of the team, and I saw his experience and the depth of his experience. And I thought, how cool would it be to be on a team led by a person of this caliber, of this nature, that's had these experiences in an industry that's new, that's just developing their anti-money laundering programs, in an organization that's investing heavily into it. And so I started analyzing transactions for them and filing these suspicious activity reports, they call it, to the federal government, to FinCEN, the U.S. Treasury Department. And then I moved into their investigative unit. It's called Know Your Customer Due Diligence. And I worked on investigations of people doing all kinds of interesting, suspicious activity or illegal activity. And we would send these reports eventually through the management chains up to Ben. He would present them. He would make decisions on if we were going to ban these customers or what kind of risk mitigation actions we would take on these guests, on these customers. And so after Caesars, I went into cannabis banking. I had an opportunity in Alaska. They needed they call it a BSA officer, a person to lead their risk management program at one of the larger financial institutions in Alaska, the community banks. And so I went up there, and they legalized cannabis, and they needed someone to help them figure out how to do this. And they thought I had an interesting mix in my background from working on U.S. sanctions work, the types of financial crime work I saw in the casino space, and then my former career working for top-tier banks and seeing how they manage risk internationally. I was able to combine a lot of this experience and create one of the first cannabis banking programs in the United States that really heavily leveraged technology so we could scale the program. And so I partnered with a compliance software company. We started figuring it out, how to get the right features in place, the right software in place to be able to manage these really high-risk relationships. And so after doing that for a couple of years, it was kind of a natural transition to the software company itself, because we built something that worked well, and a lot of banks around the country wanted to utilize this software to manage their risk in cannabis banking and other high-risk relationships, money service businesses, and things like that. So I joined this Hyper is called, the software company. I've been director of compliance with them. And that role's been kind of helped me transition into launching this company, because it was a three-pronged role where I was working with the software development team on laying out features and figuring out, understanding the users and how they would, the experience that they would want and the types of features they need, and laying those out with the software development team. And then it was working with the clients to manage those relationships, to understand them, ensure they're happy with the software, help them understand our roadmap and what we were developing, and then working on compliance and making sure the company was compliant with all of our obligations for this type of software. And so it was a really great experience. And then, and like I said a few times, like during this time, I just always had this idea. And finally, when COVID happened, just before COVID, I started putting pen to paper and saying, you know what? I think I could develop software that could really help out the gaming space, and that could be applied to different verticals. And so over the last year, and really over the last 3 or 4 months, the team started to form, and we'll run through everyone else in the team. So we partnered with Ryan Zaleski, who spends about 10 to 15 hours a week helping me out. He's a senior architect out of California. He's director of a software engineering company called Tech Dynamism. And what they do is people come to them with projects, software projects, and he leads software development teams to take that project, scope it out, build that software, and turn it over to the client. And so he's been doing that for 15 years, extremely experienced. It's really great to see him and Bruce interact, and us to kind of have these powwows and make sure we're aligning things right and scoping things out right. So he's been a huge asset to our team. He's also worked on a lot of software for multinational companies. So he has a lot of experience to kind of ensure that our software is headed and configured in the right way where we can scale our software model. Another team member is William. And William is a SOC auditor. So with this type of software, we're going to be taking in some of the most sensitive data from our clients. And so social security numbers, date of birth, names, we have to ensure that there's a high level of encryption, and that everything is extremely secure and in a safe environment. And so that's what he's done. He's worked for one of the leading companies called Coalfire, and they're an independent audit firm that go in and they certify companies for this type of compliance. It's called a service organization control, and it looks at all your controls, it tests all your controls and ensures that everything's laid out right. He's recently moved to Cisco, and he's building that. He's leading the development of an internal audit function for Cisco to ensure all their products are up to the standard. And so he's consulting us, the meeting with him, to ensure that we have everything in place and all the requirements in place to be able to obtain our SOC audit. And then our advisory group. So we pulled together an advisory group that has been very helpful to me along this path, and it's just continuing to help me in so many different areas. Ben Floyd, who I said is on the call today, is a former head of AML compliance at Caesars Entertainment. He was also at Walmart in executive AML roles, T. Rowe Price as well. He has a lot of experience on advisory committees for the Bank Secrecy Act. He was the co-chair of the ACAMS, which is the largest professional group for this profession, anti-money laundering, over the Nevada chapter, and a long resume in executive leadership in the AML space. And then Berkeley Geddes, who is, as you know, he's a board member here at RevRoad. He's been very influential in helping me out on the business side, laying the right foundation, getting the right pieces in place, informing my thinking about business strategy. He has a long, successful track record in entrepreneurialism and leading software companies as well. And then Tom, he's a good friend from Caesars Entertainment, and so he was the director of AML there. But he has an extensive background in anti-money laundering. He's done a lot of audit work. He's held executive positions at large banks, the Bank of Scotland, at Citibank, doing anti-money laundering audit, U.S. sanctions, and other related things. Then continuing on with our advisory group, we have Wong Ki Min, and everyone calls him Min. He's South Korean. I met him, we went to grad school around the same time. He was at Georgetown and I was at George Washington. We started working in international investigative work. He went back to South Korea and started his own company doing anti-money laundering advisory work there. And he works for financial institutions and gaming organizations there. Some of his focus areas are on the Middle East. He speaks 4 languages like Arabic and French and Korean and English, and I think German even. And he works, there's a lot of Yemeni individuals that go to South Korea to work and they end up in various industries, banking one of them. So they have to do a lot of due diligence to try to understand who these Yemenis people are from the Middle East and what their connections are. And so he works on a lot of that. He still works for top tier banks in the US that do business in Seoul, South Korea, and he helps do a lot of their due diligence. And then Brandon Emmett, he's the founder and chief operating officer of one of the largest cannabis companies in Alaska. And he was a state regulator in the cannabis industry, and he's done a lot of the national lobbying work in the cannabis space. And so with our risk management software, it could in the future touch the cannabis space, both from users of the software, but also content on the software to be able to monitor certain licenses and things in the cannabis space. So he's excited to join our team. And then Kevin Holler, last but not least, and he's CPA, he's an advisor at a CPA firm that specializes in cannabis as well. And he serves on the largest professional industry association for cannabis. He's on their risk management insurance committee. And so it's been great to be able to work with these advisors and be able to pull different ideas in and different perspectives and kind of head down this road. And so what exactly are we doing? What is the software that we're actually doing? What's the problem we're actually trying to solve here with Kinectify? And so gaming organizations, they're regulated by the Bank Secrecy Act, but they don't have, thank you, but they don't have adequate software to meet these requirements. And because they don't have adequate software, most gaming organizations kind of have a threefold problem. The first is it's very labor intensive to build these teams. I think at the height of Caesars, Ben could probably comment on this more specifically, but I believe there's like 90 individuals that were employed in this office. So It's very labor intensive to build these programs. Other properties that don't have it, other casinos that don't have it centralized and have it dispersed, if they have, let's say, 39 properties around the country and you have 2 or 3 people per property, and a lot of their work is duplicating work that other properties are doing because there's not a lot of information sharing, it just gets very labor intensive and very expensive to maintain these programs. They're also unsustainable. It's a lot of capital, both in terms of labor and the different technology tools that they're trying to use. There's also fines you have to deal with, and it's very high risk. And so you're spending a lot of money into something that is really a deduction from your net income, right? It's compliance work. And so it's not bringing money into the property, into the casino, into the organization, it's turning money away. And so it's very expensive from multiple fronts. And it's really unsustainable because if you look over a 10, 15-year trajectory of these programs, the costs continue to build. One of the gaming organizations that we were talking to said that they add 200 investigations to their pipeline every year. And because they don't have risk management software or any way to really cleanly and confidently document their decision-making processes in a lot of areas, it's hard for them to drop these investigations. So every year they're doing 200 and they're doing annual reviews. So after 200, 400, 600, 800, as the years go on, you have to hire more people to keep up with that increased workload. And so these programs continue to expand. Another indication of that is on January 6th, just before this presentation and preparing for it, I just did a Indeed.com job search to compliance gaming. There's over 100 job postings nationwide for compliance professionals in the gaming space. And this is during COVID, when the entertainment industry has been pretty decimated, right? And so that's just telling. And the third fault, the third one is limited capacities. And so the human mind is limited in what we can do. So when you're talking about analyzing transactions for suspicious activity, you're talking about doing background check type research on your highest risk customers, and you have millions of customers and you're trying to classify all of them as low, medium, and high risk. And with the high risk, what additional due diligence are we going to do? There's limits on what the human mind can accomplish compared to what a software tool can assist a human to do. And so those are some of the areas that really accentuate the problem. It's also really high stakes. So money laundering in the U.S., according to the federal government report, is around $300 billion a year is laundered through just the U.S. alone. The U.S. government really cares about this for multiple reasons. It supports criminal activity. It's also not tax revenue, right? And so there's a lot of different reasons why they care about this. And they're passing more and more stringent laws that are requiring organizations to be able to manage this risk and try to reduce this number. And so just a couple weeks ago, you had the Defense Authorization Act that got passed, overrode the veto. We probably all heard about that. There's 200 pages of anti-money laundering regulation in there. It's one of the biggest updates since the U.S. Patriot Act of 2001. So it pulls in new industries into this anti-money laundering legal regime. It deepens the penalties and expands some of the authorities, especially when you're looking at the authorities for international, for foreign countries. And so there's 3 basic aspects here that make it really high stakes for an organization. The first is officers can be held criminally liable of an organization. If they're knowingly facilitating financial crimes, they can be held criminally liable and serve prison sentences. Some of the OFAC, some of the sanctions regulations you serve prison sentence up to 10 years. So that's serious. Your licenses can be revoked. That's something Ben and I were just talking about a couple days ago about, what are the risks to an organization? Why do they care? And why would they spend their resources? And one thing that came up in our conversation was, you can get your license suspended. And so if you're a gaming organization and to operate, you rely on a gaming license that's issued by a state regulatory board, they can revoke that license. A third thing is penalties and reputational damage. In the gaming industry specifically, they worked really hard to shed their criminal past, right? Everyone knows them and thinks of gaming organizations in this dark past, right? And they've worked really hard to become modern entertainment establishments, right? And they have corporate events, and they encourage corporate companies to go there and make a lot of revenue on conferences and things like that, and that kind of entertainment. Everyone knows of these shows you can go to, and you can see all kinds of different, just lots of different types of entertainment. And so that reputational damage is very serious to them. And then also the penalties. And it's not just the financial penalties. You might get fined a few $1,000,000, but with that fine comes a requirement to get audits. So you're bringing in KPMG, you're bringing in Deloitte, which is very expensive. And then they're identifying things. And then you're having to fix what they identify, which means hiring more people and getting more systems in place. And then what if they identify something that might be ancillary to AML because they're on site, and then you got to fix these issues in other areas. And so there's a much larger expense than just the dollar figure of the fine. And so what is the solution? So the problem has kind of been laid out. What is the solution? Our idea of the solution, one aspect of it is a powerful know your customer tool to centralize risk relevant information in one place. And so that's the idea of Kinectify, to bring all of this risk relevant information in different people's spreadsheets and access databases they're using, and OneNote and all these different areas, all into one place under customer profiles. So at the click of your fingers, you have the information you need to have to make your risk-based decisions. We're gonna release this in 3 different modules. And so the first module is we have legal, then risk, and then what we call compliance, which is customer monitoring and profiles. The legal module really focuses on aggregating all the laws and regulations globally in each country of the world. So you know what those AML laws in that country, you know what those risks are. So when you're dealing with the transaction from, let's say, China, and your analyst is trying to figure out what are the risks associated and what types of transactions are happening, they can see what those common risks are in China, what the laws and regulations for AML are in China at the click of their fingers, instead of having to do a lot of Google research and worrying that they might have missed something. And then provide this. The second module is a risk assessment tool. So provide the capabilities for an organization to see all their business lines, and then within their business lines, be able to see what are the inherent risks for anti-money laundering, what are our controls, how effective do we think our controls are, what are the gaps, and what are our action items that we're going to do over X amount of months to close those gaps. And then the third one are profiles, like I said before, to centralize all this risk relevant information into these customer profiles, to be able to screen these customers against these prohibited lists, like these US sanctions lists, and then to conduct these know your customer, like basically background checks, to look at publicly available information on customers that are high risk, be able to assess that information, all the negative information, and make risk-based decisions on each customer. When we brought this tool and we started planning out building this tool, it's very robust to get all these 3 modules in. It would have taken us about 1.5 years to develop this tool, and about 2 years until we could test it and get clients on board, which is a very expensive endeavor. So we went back to Vegas, we talked to the casinos, we started parsing down what would their minimal viable product be, and they asked us for this last module, this customer profile monitoring module. And then within that module, we parsed the features down to what they said would be a powerful and a good set that they would be excited to use as a first product. And then we could build out these other modules over time. And so I pulled together an informal group. I call it my advisory work group, but we don't have an official name for it. It's just an informal group. Friends of mine in the anti-money laundering space. We all started out at Caesars Entertainment. They've spread out throughout the gaming industry, and they work in senior analysts and lower managerial positions at these industries. So they would be the actual users of this product on a daily basis. So when I started putting the product together, putting the wireframes together, all the display screens together, I went to them and we parsed down what the minimal viable product would be. And then as I laid things out, I had this just natural consulting group to go to and say, hey, how does this workflow look? How do these buttons look? What should this do and what should that do? And it's been really great to be able to have that feedback over the last year as I've developed the product. And you see the fruits of that now, because when I share the product, people are like, this is fantastic. and they're like, this is great. And it generates a lot of excitement. And there's a minimum level of feedback. A lot of people say maybe 1 or 2 little things here, but a lot of it's been vetted out already. And so it's really exciting to see the fruits of that. We have a potential beta group. And so through these relationships we've been building, we started conversations, letter of intent conversations with 3 organizations. They're still in the beginning stages, so I don't want to misrepresent the progress here. But we started at the analyst level, and it usually goes, the analysts get excited, and they refer to the managers, who refer to their directors, who are going to refer to the executives, and probably the CFO will get involved and will make that decision. And so we're kind of at the manager, director level now, having those conversations. And the holidays slowed us down a little bit, but people are still really engaged and interested, and those conversations are continuing. So now it's time for the demo. I just wanted to show you what we've laid out and the progress we've made. Before we go into the demo, I've shared a lot of information about kind of the foundation of the idea, the problem, what we're solving, the team. Are there any questions or anything people want to talk about before we jump into to the demo? Yeah, Bruce.
So the huge group that was, so you said there were like, what, 80 people at Caesars at its height?
Yeah,
Are all those, I'm assuming the majority of those are just like analyst level positions, right? They're the ones doing the grunt work, so to speak.
Sure.
So a few things. What was it that they did to reduce that? Did they implement better procedures? Did they decide it wasn't worth having a team that big? Did that just naturally like, how big is their team now? Because you had said that's how big it was before. Did they consolidate properties, or like kind of what's happened to the landscape there?
Yeah,
kind of
that's a really good question. I think a few things happened. I think over the course of the years, analysts get better at their jobs, so they're more efficient. They can get more done in less time. You do refine your procedures. I remember one thing that they did that was really good was they have annual gaming events, like you've probably heard of, like the poker events at the Rio, things like the World Series of Poker, things like that. It would generate a ton of false alerts because you'd have a ton, like there'd be a huge uptick in play, and it'd be hard to explain that play. And so you'd have a whole huge uptake of things you'd have to investigate that were false. So there was a lot of focus. I think Ben and his leadership team got together. There was a lot of focus to figure out how best to manage risk when you have these types of upticks. And they're able to reduce labor around some of those events by having smarter policies and procedures in place. And so a lot of it's management, smart management. Another thing that Caesar specifically did is they did invest in technology. And you have companies that would come in and build you robust custom software that's really extremely expensive. You have like a SAS and an SAP. This company, Nice Actimize, will come in, these large enterprises, and build custom software. And so they did invest in that over a period of years. And so they have that in place at Caesars. Not a lot of other properties I'm aware of have gone that route because it's very, very expensive to build that type of level of custom software. And there's some drawbacks, in my opinion, of that, because a lot of these custom software builds, they can be powerful tools. A lot of times, in my opinion, they don't bring in the analyst level users or people experienced in software and being an analyst to be able to lay out the software in a way that's really simple to use. So it can create a lot of complexity. But that's what Caesars did to reduce their workload. Ben's on the call if he wants to chime in to explain other elements of what Caesars did to better answer your question. But from my perspective, I think those are some of the points that helped.
Okay, so a combo of things. Yeah, go for it.
Yeah, I can have a few comments as well. So when I came to Caesars, it was Caesars was under an investigation, a government investigation for, poor compliance practices historically, and and they had a very decentralized program. So Caesars being a multi-unit, multi-casino company, they had casinos around the country as well as in other parts of the world, but it was all decentralized for the most part. and so it wasn't very efficient. So as Joseph indicated, we first went and talked to our current systems provider, our anti-money laundering solution, which was and will be one of Kinectify's key competitors in the gaming space, a company named Every. And they had a solution, but they didn't have a roadmap of what the product will do in the future. And it was also very decentralized, meaning it looked casino by casino, and it was built that way. So we went out and looked for better solutions, as Joseph indicated. We ended up going with a company called Nice Actimize. It's I think over time, well, one the solution wasn't geared towards or built for the industry. It was built for the banking industry for the most part. So it required a lot of customization and in some ways, I would say bastardization to get it to work for the gaming industry. And so it introduced a lot of efficiencies and looking at activity and customers across the entire network as opposed to just at the individual casino level. So that was a benefit. But it was also it was more complex than it needed to be. So I think that part of what Joseph's vision here is where it will be beneficial is being tailored to the industry and being, as I think was said earlier, a more elegant solution to be able to do things more efficiently. So, but again, from a Caesar standpoint, that's the kind of the path we took. I think Joseph already mentioned over time. This is a multi-year process. We really got better at understanding the system. The analysts got better at their work, and so we were able to through attrition kind of reduce some of that headcount. But I think there's still a lot of opportunity for effectiveness and efficiency in software for the industry.
Cool, that's super helpful. What does it take to be like an analyst? Is that like what are some of the requirements? I mean, if there's close to 100 jobs that are open right now, is it a really smart person with a bachelor's degree that knows how to do research? Is there specific training that you do, or is that something that you just kind of you learn on the job and you get better with over time?
I think it's a mix, and Ben can chime in too. Since he's been in the position to hire and write these job postings, but in my opinion, it's a mix. So you have, I'll start from low to high. So you have low-level analysts, I would call it. If you're on the KYC side of the house doing these investigations, these background check type investigations, you might hire someone maybe $40,000, $50,000 a year, pretty low level that will do research on litigation. They'll just go to local court sites and see if you've been arrested for drug-related crime or something like that, and do some Google research on you in the media. And that's basically what they do. It's their kind of full-time job in a lot of instances, just doing some really basic background check type research that's tailored more for financial crimes. And then you'll have similarly lower level analysts that will look at transactions all day. And they say, is this normal activity in a casino, or are these transactions indicative of some type of crime? So they're just looking at transaction line items and seeing suspicious activity. So you have these lower level positions. You also would bring in more specialized people. So on the investigation side, you might bring in like a former FBI person, or you might bring in someone like me that has certain language skills, that has done a lot of international due diligence work, and maybe you pay them a little more because they're augmenting that team and bringing in subject matter expertise. And then you have your tiers of management and your executives. And so one thing that Caesars did really well is Ben and his management team, I thought it was really smart that they mixed people from the banking anti-money laundering space that had just knowledge of anti-money laundering, knew like how to do this stuff and the right policies and procedures to get in place to create efficiencies. And then you had a lot of operations people from the gaming world that they brought in. So they would bring in dealers and hostesses in the gaming space. They would bring in people involved in security. And so you'd have this mix of people from banking and gaming. I thought that was a really smart strategy. But there's different strategies. But yeah, that's kind of how it's tiered from kind of low to high. And obviously from a management perspective, you're probably trying to reduce costs. You're trying to go to the lower end and get more analysts with a basic set of skills to be able to meet your minimum requirements.
Okay, cool. And then last thing, it's completely unrelated. The new regulations that you just mentioned that have been put in place. Is there any specific monies tied to that, or is it just a penalization for not following those things?
Could you
Like
explain that question just a little more?
Well, like from a government standpoint, like is there any I don't know, are there any government funds available to help implement any of these things?
Oh, no.
Or is it all just, well, here's the big set of rules, and if you don't follow them, then we're going to go fine you a whole bunch of stuff?
Yes, the latter.
Okay. Cool. That was it.
Yes.
That's usually how it works.
So I think it might be helpful too, just to walk through a very simplistic, a bad actor wants to bring money. What kind of steps do they take to do that? And, how does that pop up as a red flag in your organization? But what would be the typical logistics to move money around and change it from one currency
There's
to
some
another?
fun case studies. There's fun ones that I like to use. I like to use extreme ones as examples that you don't see every day, just to kind of highlight types of patterns that you'll see. One would be, let's say that I go to West Africa and decide that blood diamonds would be a good idea. And then I go generate $2 million in money, right? In cash from blood diamonds, right? And I want to bring it to the United States. Let's say I'm a UX designer and I make $60,000 a year. And I walk through the airport with $2 million in cash in a suitcase and I get caught. I mean, how am I going to explain that, right? I'll end up in jail. I can't really wire that money to a bank because the banks can ask the same questions because they know my employment. It's in my bank profile at Wells Fargo. So they're going to be like, why did you just wire $2 million from yourself from West Africa? That's weird. And they would report it to the federal government. The FBI would come knocking on my door, the police. So I'm like, how do I get this money into the United States? It's not as easy. Back in the day when banks weren't as regulated, I might just go somewhere and deposit it into an ATM. And then I come to the US and I start withdrawing it in the ATM. But now they monitor the ATM usage like that. So I can't really do that. And so I might have used the money service business like Western Union. And I just transfer the money to myself here and no big deal. But now that's monitored, right? And so you're trying to find ways that aren't as monitored to move this money into the United States. And so for a while, gaming didn't have a very sophisticated level of monitoring. And so I might go open a shell company in the British Virgin Islands or wherever. And then I might just use that shell company and I just transfer the money to my safekeeping account at Caesars, right? Because it's very common to wire money to a place like Caesars Entertainment, because if I'm really going to play and I'm genuinely, let's say I'm a wealthy businessman from Asia and I want to come play, I'm not going to, and I want to play $2 or $3 million because it's fun for me, I'm not going to carry that with me, right? I'm going to wire it. And so those mechanisms are already set up in the casino to accept those funds and hold those funds for you, and you can play against those funds. And so I just wire it, and then I come to the casino and I withdraw a little bit. They call it minimum gaming. And I just sit at the table and I sip on my drink and I have fun with my friends, and I don't wager very much of the money because I don't want to lose it. And then I cash out and I wire it to the US financial institution. The US financial institution, there's no notation on that wire, it just says Caesars Entertainment. So it looks like I got lucky. And so that's one way to move your money offshore and onshore. There's a lot of different ways and a lot of different schemes and patterns. That's just one example. But for a long time, there wasn't a very sophisticated level of monitoring. One company that Ben mentioned is Every. Every is a company, and they own a lot of the middleware at the casinos that process transactions, right? And so since they own that middleware, they're like, why don't we just make some anti-money laundering software? So they have a very basic anti-money laundering software that it analyzes transactions, and it'll just say, oh, this is looks suspicious. And then it flags it for you. And that's basically all it does. It doesn't give you any additional detail. It just says, here, this happened, here's an alert. And then you go and investigate it, and you look at all the transactions in your own software systems. And then once you pull all those reports together from all your various systems and you do all the work, then you can go into Every and you can file this report and it sends it off to the government for you. And that's basically what it does. It doesn't have any profiles for the customers. It doesn't aggregate the information. It doesn't really help you with the analysis. It's a very basic tool that will generate a series of red flags to say, hey, these X, Y, and Z happened. You should probably go investigate these. And so there are some basic tools that do very individual elements of what you would need for compliance. You might go get a LexisNexis, right? That's used in legal research, and that will help you look at laws or litigation against the person. So you can do your background checks that way. You might get this tool like Every that will analyze your transactions, but there isn't really a tool that pulls it together. So casinos will either invest in multiple tools and try to get like a mix and have a lot of manual processes and spreadsheets and Word documents to kind of fill in, or they won't use any of them. And a lot of casinos just do it manually. So some casinos will use like an Access database to try to pull things into at least kind of one place. And then they'll use like Microsoft OneNote to try to keep it organized. And so that's kind of what you're seeing in the casino space right now. Ben, do you have any color you want to add to that, or anything you wanted to adjust to what I said?
No, I think that's a good overview.
Okay.
Something like Every, would that be something that generates that audit list, like the list of people that you should look at? Sorry, I'm thinking of some of the conversations we've had about like the software development piece.
Yeah.
Like the list of all the people that you need to like audit, right? All of those, and like, would that, like,
It could like produce a very small percentage of that list.
Okay.
So it would produce a list that would say like, this person brought in, they did a X, Y, and Z transaction, right? And so they would say, all right, so you would have some patterns set up for minimal gaming. So this person came in with $2 million, but they only wagered like 2% of that or something like that.
Yeah.
So it would identify like one transaction,
And then
and
you have
it
to
would
go
flag it for you, right?
after that.
So there's a lot of other elements to producing a high risk list to say, here's all of our high risk customers. You would have thresholds like how much money did a person bring into the casino over the course of a year? Did we receive a subpoena from a law enforcement agency on this person? Did this person pop up in the news? Did this person pop up on a watch list or sanctions list? There's a whole sphere of things that would produce a high risk customer list. And that's what Kinectify tries to solve, is trying to bring all this information into one place, be able to scan what I would call like the stratosphere, like all this publicly available information on people, and bring it in to say, here's your high risk customers, right? As the product matures, and Ben and I have been having a lot of conversations about this as the product. So this is just the MVP version. As the product matures, we're going to get into transaction analysis and case management and filing these reports to the government, because it's a huge labor on casinos, and have like a one-stop shop. And as you start integrating transaction analysis with what we're doing, which is more like public records, then you have this really comprehensive list where you can automate a lot of what you're talking about. And we could start automating and saying, here are your high-risk customers, all of them, based on both transactions analysis and on publicly available information.
Okay,
Yes.
Joseph, one of our online attendees, Adam, asked, will and/or should your analysis include cryptocurrency transactions? Are the new government regulations going to include these types of transactions?
That's a really good question. From my experience, and Ben might have some color to add to this as well, but from my experience, gaming organizations have, for the most part, kind of stayed away from crypto and blockchain for right now. They know they're pretty high risk institutions as it is, and maintaining bank accounts and all of that. They're already high risk. And so I don't know if there's going to be a big uptick in blockchain. I would imagine as blockchain gets more normalized and their banking relationships get more normalized, there might be more comfort to integrating that technology in the gaming space. Or maybe there's some edge cases that I'm not personally aware of where there is usage of blockchain and crypto in the gaming space. Knowing gaming organizations, if it were acceptable, they'd be all about it. They're always exploring new technologies and how to enhance the gaming experience for their customers and their guests. And so right now, I don't know if there is a huge need for crypto analysis on our platform for gaming organizations, but conversely, there is a huge need for the same features that we've laid out for crypto organizations themselves. So people in cryptocurrency and blockchain, they're being regulated. The government's actually indicted a few of these leaders of these cryptocurrency companies under U.S. anti-money laundering law, and they're facing criminal charges. And so there has been a lot of criminal activity that happened in that space. The government's really pressuring them. Banks are pressuring them. They could lose their banking relationships. And so they need to build these compliance functions. And one really great example of that is an analyst that used to work on our team at Caesars has left, and she works for a cryptocurrency company, and she's an anti-money laundering analyst. She told me that there's 15 people in this crypto startup, and it's a huge crypto startup. It's backed by one of the larger cryptocurrency companies out of China, and they want U.S. operations. So they started this company. There's 15 employees, and 4 of them do anti-money laundering compliance. So 20% of their workforce does what our software is going to directly address. And right now, she said they don't even have time to look at transactions and what suspicious transactions, because they're spending all their time doing background checks on people and trying to figure out, there's so much anonymity, trying to figure out who these people are and what publicly available bad stuff is out there, publicly available information that's bad, negative out there on these people, so they can assess the risk of their customers before they even start looking at the customer's transactions. So they're backlogged over 1,000 of these research cases on customers, just working down the list. And so they're really keen on getting software software like Kinectify in place. And there's not a lot of options out there for their industry right now. A lot of the software that's out there is really designed, like Ben said, around banking, and it's really difficult to apply that to other industries. And a lot of it's built and architected around analyzing transactions, and transactions manifest differently in each organization. So if you architect a software around transactions, you can't really apply that software to different companies in different spaces very easily. So we're architecting our software really around customer information, because every company in the US has customer information, social security numbers, addresses, date of birth. If you architect the core around that of the software, then you can apply it to different spaces. And then as you bring in transaction analysis, you can bolt that in for different industries. And so you can start serving industries. It's kind of flipping the software, in my opinion, on its head, and looking at it from a different angle, so it's more versatile. So that's the play. Any other questions before we move on to the demo? All right. Well, thanks. Those were really good questions. Let me just minimize my screen here and pull up the demo. Just for like time management purposes, I'm not going to go through every screen and every dashboard with you. I don't want to put you to sleep. So I'll just focus on the backbone of Kinectify and what it's really built around, and it's these customer profiles right now. All right. So this is what the basic customer profile screen is laid out to look like. At the top, you'll see some key customer information. It's a banner over the top. It gives you their name, their customer number, and their risk score that we've produced, and their status as a customer, the industry they work in, and any related profiles, which are hyperlinks to those profiles. It gives you the related profile and that related profile's risk score. So you can start understanding these relationships in groups, because most of the time financial crime a lot of times happens in groups. And so it gives you some key information, and then there's a series of horizontal tabs. And as you click these tabs, each tab is a powerful tool to help you manage risk. And it's all of this risk information centralized in one place. So the first tab is the profile tab, and this is what we import from their native system. So their customer information, their names, their customer numbers, their social security numbers, their addresses, and all that basic information. The relationship tab, this is really exciting technology here. It's called Neo4j, and it's a special database called a graph database that visualizes connections between customers, between data points. And so this will enable a gaming organization to understand the interconnections between their customers, which you think might be easy, but they don't have a tool like this right now. And it's not very easy to do when you're talking about 7 million plus customers. And so let's say a husband and wife don't share the same last name, but they have the same address and they have the same phone number on file. So a lot of times, maybe a husband and wife are doing criminal type activity, suspicious activity together, but an analyst wouldn't naturally know that because they don't have the same last name. So why would they know that they're related, right? And so our software will be able to surface those relationships to say, these people live at the same address, these people share the same phone number in your system, these people work at the same company, those types of things. So you can start seeing those interconnections. And then whatever connections are material, then you can add it to a related profile if you want to start managing that risk in groups and saying these people are related, and that's a material relationship. So as you click on these different nodes here, it displays this information in the left panel for you, so you can navigate and you can understand the interconnections of your customers. Now, this is the MVP version, so the beta version. In the future, when we get into things like pulling in transaction information, we can start mapping out the transactions that happen between people, right? There's another tab that we've removed from the MVP called Network Intelligence, where we can have a team of people that can take high-risk individuals like U.S. sanctioned parties, prohibited parties, and they can see the companies they work at and the board memberships they have and start mapping out visually these networks of illicit actors. And then you can start having analysis to say, like, Jacob Smith owns a company that's wholly owned by a company that's sanctioned by the US government for facilitating drug cartel activity or whatever. So you can start visualizing these high-risk corridors, these relationships, and that will be really helpful. There's a lot of different high-risk industries out there. Right now, Mexico is actively considering legalizing marijuana. It would be the biggest legal marijuana market in the world. Lots of cultivation happens there. As soon as they legalize that, depending on the U.S. stance, you might start seeing imports, cultivation happening from Mexico. Drug cartels are going to be affiliated with that business. The U.S. government's going to be very concerned. So there's a lot of opportunity with different high-risk industries like cannabis, with the U.S. sanctions list, drug cartel lists, with the U.S. sanctions programs, to start mapping out these interconnections, right? To say these people are affiliated with these companies and these individuals are affiliated with these companies. And so you can manage that. But that's a larger endeavor. You have to build a team to do that. So it's not something we've included in the MVP. So the basic, the nebulous for this, the starter for this, is just simply mapping out relationships between their own customers and visualizing that for them. The next tab is KYC audits, which is something they do. We've talked a lot about these basic background checks. Here's your high-risk customers. What is all the negative information out there on these people? So for this, you would start this audit. We have a partnership we're developing with a company that specializes in scanning media and litigation on people that use artificial intelligence to scan this information, to weed out the false positives and really get to the core issues for an individual. So you would click search here, and then you would have a series of banners for each person, and it would tell you, for example, like adverse media, here's all the negative news on this individual. You could pull up those news articles. You could see if it's something you want to include in the report. You click these check boxes and you basically build your report. At the end of building your report and going through your approval process, it spits out a really nice PDF report that lets you know who was investigated. It tells you a risk score for the investigation. It tells you all the people you investigated, all their risk scores in Kinectify, how they performed on this audit, all the negative stuff that you found and how that scored. And then for each section of this audit, it tells you how they scored. So you can really start seeing for all your individuals, which ones are truly high risk and why. Do they have litigation against them? Are there negative news articles against them? Do they have suspicious transactions? Is the information they gave you about themselves maybe not accurate, their date of birth, their social security number, and things like that? And so and then another thing it does is it allows you to start dropping people from investigations, which is a huge efficiency gain. Because right now, like we said, a lot of times people are added to these pipelines, and then you have to redo this research every year, these annual reviews on people. And they might not be high risk, right? It might have been a false reason why, or you might have not found anything publicly on them. And so now you can justify to say, we're not going to investigate these people next year or next quarter, whenever we're going to do this investigation, because we didn't find anything. So it doesn't look like they're doing anything suspicious right now. We don't have any concerns. If anything happens in the future, we'll reevaluate at that time. And you can leave a note for yourself, for the auditors, so you have an audit trail to say why you're making these decisions. So on this example, if you have 4 people you investigated, but only 2 people really have suspicious things you found, negative things, then you just reduce your workload by 50%. You drop 2 people from the investigation next time around. And so that's the idea here. And then for documents, we have a document collection tool where you can almost works like your network folder in Microsoft. So you can add documents here, anything that you're collecting on your customers, anything you're finding publicly that you want to attach. You have a central repository for that. A communication tool where you can communicate with other organizations about people doing suspicious things. And so a lot of times, like the example that I gave when Ryan asked, how does suspicious activity happen at a casino? Let's say you have that example, and this guy's bringing all this money from some shell company, and he's wiring it to Wells Fargo, and he does it over and over again, and there's millions of dollars going to Wells Fargo, and you're concerned that Wells Fargo doesn't realize that this is happening. So you want to tell Wells Fargo and be like, this is happening, and then ask Wells Fargo, do you have any concerns about this person? And you can have that conversation. And that conversation is protected under U.S. federal law, under the U.S. Patriot Act. It's called Section 314B. You have safe harbor, as long as you only communicate with the authorized party at the other organization. So you can share their social, you can share their date of birth, you can share all this sensitive information about a person, but it has to be done with only the authorized party, and the authorized party is registered with the federal government under this communications program. So our software will pull in that list, the authorized list, and keep it updated from the federal government, and then provide a simple chat tool so you can chat with these other organizations, and everything's documented and time-stamped, and there's an audit trail. So you know you're in the clear and protected.
So do those other organizations have to be on your platform to do that chat feature?
No, they actually don't. So if they're not on our platform, they'll receive an encrypted email, just like you do for like a help desk ticket. So you receive a encrypted email, you log in, you put your comment in and hit send. And then we have another feature in here where on the communications page, if they refuse to use your platform because they're Wells Fargo and they're only using their platform, you can just save a PDF of that. And instead of saving your network drive, we have a document repository right in Kinectify on that page, the communications page, to say like non-Kinectify communications. So at least you have a clear audit trail to say, you know, here's our communications in Kinectify, and then here's some of the communications we had to have outside of it. So we have that. Any kind of events that come up, we'll be screening these customers against these watch lists and prohibited parties lists. If there's a positive match, this is where they end up a list of all these risk events that happen. If the analysts find something on their own, they just simply come to the icon, add new, add their event, describe it, add the attachment, and they have line items here. And then risk factors, these risk scores are produced by our system. And so this shows you how our system produces those risk scores. So there's line items of risk, like what country you're from, if you're in a designated high-intensity drug trafficking area or designated high-intensity financial crimes area, which the U.S. government designates, the DEA and FinCEN, are you on a sanctions list? What were your scores on these KYC audits we did? So we have all these line items. The line items roll up into categories, and the categories roll up into the top level score. And so you can see exactly how our system scores it, which is pretty groundbreaking. A lot of these systems produce these risk scores, but they don't tell you how they produced it. They're like, oh, that's a proprietary algorithm. And so for us, yeah, we have our algorithms, we have our calculations, but we're also very transparent. So it's very transparent and logical so people can understand where it came from. And then if they disagree with it, they just customize it. And when they customize it, they get our system score and their custom score. And so try to think through this, and then just general notes. So any notes that you have on a customer that you want to keep, then you have a repository for that. And that's basically the main backbone of our MVP version, these series of tabs that provide really powerful tools and a centralization of this risk management activity.
Okay, Joseph, got another question from AJ. So how does Kinectify handle the liability for laundering activities that still may happen in casinos who are using your software?
Yeah, that's a really good question. So luckily, the way that federal regulation is structured, it's the responsibility of the organization to run their compliance program. The government encourages them to use software tools to facilitate that, but the ultimate responsibility falls on the leaders of that organization. So we've built tools in Kinectify for them to test our system, and it's highly configurable, so they can configure and test those configurations in our system. So we're providing a tool, they're running their compliance program. And we'll have that listed out in our master license agreement. We also have external auditors. That's why we get the SOC compliance. We'll have an external auditor come in to say everything is encrypted. And we'll have a second external auditor come in called modeling validation that says, this is the functionality and this is how they built it. There's a model and it works according to what it does, what they say it will do. And so we have these independent reviews that we give to them to say the software works as intended and it's encrypted and safe. And then it's up to the organization to configure it and to use the tool and to manage their compliance. And if they want to do things outside of the tool, it's not our responsibility. It's the responsibility of the organization to run their own compliance program. Any other questions? Yeah.
Yeah, so Joseph, this is awesome. Could you take a minute and go through and share the economics
Yeah,
of the product and
absolutely.
what you're anticipating?
Yeah, absolutely. So the economics really starts with this next slide here that I want to share. We just have a few slides left and it's really around the economics. Thanks for bringing that up. So a big value of our product is the efficiency gains that they're gonna gain. So I work with a CPA to model out what that might look like over 10 years for an organization. We took Penn National Gaming because I'm most familiar in my conversations with them. I'm most familiar with the inputs into this for them. They kind of helped me understand the amount of investigations they're doing at some local properties. They had a decentralized system like Ben says Caesars was before. They have 39 properties. They have a couple of compliance people at each property across all 39 properties. So they have significant cost for this right now. And so out of the conversations I had with their Ohio properties, I extrapolated what that might look like nationwide. And we put those inputs in. And then we're going to give this, we're going to clean this up, make it look pretty, and give this to our potential clients in the future so they can mess with the inputs and see the delta between the cost savings of what Kinectify will give them and then their current program. But this might be an extreme case because Penn National Gaming is a national organization. And like I said, we're early in conversations with them. And so these assumptions are just extrapolations of our conversations with them right now. But let's say that Penn National Gaming spends about $2 million a year on their anti-money laundering program across their 39 properties. And then every 3 to 5 years, they hire one additional person at each property to keep up with their investigations, right? So then that means that they would be adding, you can see this uptick in this green line. Their program would go from $2 million to $5 million up to $8 million 10 years down the road. And so it's really unsustainable growth. With our software, their first year, they would be spending more money, right? Because they're installing the software, they're paying for the software and for their current labor levels. But within a year, it pays for itself, right? So they're starting to gain efficiencies. They can pull that staff off of some of the manual processes they've been doing, and they can turn their attentions to things that are more valuable for the organization, right? Or use them in other capacities. And so they'll gain that software, that advantage by year 2, and then the line stays a lot more flat. Ben and I were kind of reviewing this and talking about it without digging too deep into the numbers yet. We're going to be doing that in the near future. But if they centralized it on an enterprise level and they added just a couple staff every few years instead of a couple staff for each property every few years, they're saving an incredible amount of labor. And so that line stays a lot more flat as they scale. But even if these numbers are extreme and our line goes up a little bit steeper and their line's not as extreme, that delta is still there. And that delta is still worth millions of dollars. And so that's really the value proposition here for organizations. At other organizations, it might be a smaller delta, But the fact is that gap is still there with software and without software. Yeah.
And so those are just the economics based on, the delta between the two, but it also doesn't include penalties and, all these other potential things that could happen because they're not efficient at what they're doing. So you can't really quantify that, but I like that explanation.
Yeah, thanks. And there's other things like when you go through these annual audits from these KPMG Deloitte groups, you're spending a lot of time producing documentation. They're like, give me all your investigations for the last year. And you're like, well, that's too many. Like, give me 10% of them. Here's my random sample. So you're digging through your network drives trying to find these investigations. And you're like, oh, I forgot to write this sentence or save this. And then it's a finding on your audit. And so a lot of this is back and forth with the auditors, where if it's laid out cleanly and you just click a button and they're like, give me the sample of these people and the investigations you did, and you just gave them a zip file, or you gave them read-only access to the platform and you're like, have at it, then that's just, there are these other cost savings and headache savings and stress savings. All right, so other markets, we're focused on casinos because that's where our networks are and there's a huge need for the software there right now. And so that's kind of split up. So Ben and I confirmed these numbers just this last weekend. There's about 1,250 individually operated casinos in the United States, or gaming organizations. Those include online gaming, commercial casinos, tribal casinos, card clubs, things like that of that nature. And so we'll be focused on that. It's split between some large players of smaller numbers, and then you got your medium players that are a little larger, and then a whole bunch of smaller organizations around the country. So they're kind of split that way. Virtual currency companies, we think there's about 500 operating in the US right now, and that number is expanding, and they're getting hit really hard with regulation. And so there's an opportunity there. Compliance is becoming increasingly important there. Cannabis companies, there are a ton. California alone has 10,000. But it's the same with gaming. You have a few national operators, and they're buying up these smaller operators, and you're having national brands now. GTI, Green Thumb Industries, is one of the biggest ones. So you have these national operators. They care a lot about compliance, will invest in it. And then you have a lot of smaller operators, right? And so the risk management CPA that works specifically on cannabis risk management said, because it's becoming more normal, cannabis is across the country, and in people's minds and business leaders' minds, investors' minds, it's becoming more normal. They're like, over the next 2 or 3 years, the government's going to be doing a lot more auditing of these organizations, he thinks, and compliance is going to become increasingly more important to these organizations. So he thinks there's an opportunity, a significant opportunity there as well. So we put that in there for future markets, and then some community banks, and then of course businesses with international operations. And so there's a lot of markets to go into in the future. There's a lot of potential growth. As far as our go-to-market strategy, we're going to continue to have this validation with market leaders as we develop the product. We have these different build-out stages. So we're done with the wireframes. The UX designer here at RevRoad, he's helping us professionalize them now. He thinks he'll be done, I believe, by early February on that process. And then it's the prototypes, just building it out over the first year. And then it's split between our team and RevRoad's team to make that happen. In the meantime, gaining signed letters of intent from these casinos and getting our beta test group together, and then commercializing it and selling it. The financial projections, Ben and I have been reviewing these to really kind of get an idea of what's palatable in the marketplace for our MVP. We're going to make some adjustments. I got some really good feedback during our conversations this week about it. And I'm going to follow up with Seth right after this meeting, and we're going to start finalizing our financial projections to have those done. I believe today or tomorrow we'll have those done. And so we're going to drop the top tier price down a little bit further than that, to more like $450,000 for the MVP version. It'll go back up as we release these other features over the first 5 years. But as far as month one, day one of the beta test, the current features we have laid out, we'll probably drop that down, and then drop down the tier 4 pricing down to $70,000. And so it'll make an impact. But like I said, that's just the MVP version we're getting out to the market. As we develop features, then that value will grow. Yes.
And that's an annual subscription?
Yeah, those are annual subscriptions. It's broken down into different revenue streams. And so we have a base subscription, and then we have profiles and monitoring. And so we're doing it by the size of the organization and the number of profiles they're going to have on the system is how we're pricing it out. But when Ben and I are talking about this and seeing what's palatable in the marketplace, we're thinking overall, what is an organization willing to spend on the software package? And that's what these numbers represent, regardless of the different revenue streams we're going to extract from it. Yeah.
So can we do some analysis on every and just make sure that we're not placing it too low when we enter the market? I mean, there are some strategies there that you've looked at. What?
Yeah.
Okay.
Yeah, we have. Yeah, we're doing comparable analysis to that kind of thing. I think with our MVP, the thing is we're not doing transaction analysis. So we're not a one-stop shop for everything. What we're going to do is build a software platform that's centered around this customer information so we can deploy it to other industries, and we build the software right so it's versatile. And it's going to make a huge impact on efficiency and decreasing labor in a lot of areas. So it's very attractive. And then we're going to start building the software out to be more of that one-stop shop for them as we get in there, gain that experience, gain that maturity, and start taking on. These are big investments, though. So if we get into transaction analysis, we're talking about artificial intelligence, machine learning, complex algorithms, behavioral-based algorithms that don't look over individual transactions. They look over periods of time, 4 months, 6 months, types of behaviors on people. So it's very complex, but then you have to file government reports, and it's not a one-way report, it's a two-way report. It's a two-way channel you have to set up with the federal government to say, here's our report, and if there's errors, they kick it back. You display those errors. Every 90 days, you have to have a new case that generates. The system generates this, because every 90 days, you have to file a recurring report to the government. As soon as you file the first report that says something suspicious, you got to follow up in 90 days and file a follow-up report. And if you don't have a follow-up report, if the suspicious activity is stopped, you have to have that audit trail to say why and why you're not filing any more of these audits. So it's a very complex thing. Just the client. So from a software perspective, you have to get a client that's released by IBM to hook in with the government, and it's $800,000. And so we're talking about significant investments, but there's also significant return. So we invest that money to build out the AI and to get the client to connect with the government. You're dumping in money, but then for the top tier clients, you might charge $1 million or $1.5 million a year for subscription. And so that's with this financial crime software, it's the need is a sophisticated need. The build from a technology perspective is a big build, but there's also significant return on investment and a market that is eager for this type of software and these types of efficiencies. Yes.
And you answering Jason's question was actually kind of part of what I was going to ask. So if your tier 4 is at $150K a year, your ideal customer isn't a mom and pop, shop. Like what's kind of like, what size of organization would you kind of say that you're targeting first? Like it's going to be enterprise customers that are X number of clients, or like how are you choosing like who you go after initially?
Yeah, it's a really good question. So our initial beta test group are the enterprise level larger organizations, because there's a ton of efficiency that they can gain, and it's something they need, right? And current software models, like Ben said, with Actimize, they came in and built custom software for Caesars, and super complex. And some of the analysts, they really struggled on figuring out how to use it, right? And so you can have really powerful tools and the user can't use it. What good is it, right? It was not that extreme, but it's difficult. And so we want something that's more elegant, simplistic, that they actually enjoy being in and using. So it's a different experience. And so there's a huge opportunity to release powerful tools that create a lot of efficiencies that are enjoyable to use, and then building out those feature sets over time. So the first clients are more enterprise level, but we want it scalable, so in both directions, so we can capture the whole market, as much of the market as we can. So what we want to do is actually decrease tier 4 pricing a little bit, to be able to attract smaller card clubs and things. There's a lot of those, especially in California. There's a ton of card clubs that need to do this type of analysis. And if we can have a minimum set of features for them that are easy for us to maintain, affordable for us from a customer service and maintenance perspective, then we can drop that price. And let's say there's 300 people paying $70,000 a year. What is that, like over 20 million? That's like over $20 million a year in revenue. And so there is significant opportunity in the small, but I think in the early days, it would most likely be more of an enterprise level, and maybe the larger mid-size organizations, because they have issues and they're spending a lot of money and there's a lot of efficiencies to gain, and they have deeper pocketbooks to be able to pay larger subscriptions. Ben, would you think that that's an accurate perspective on the strategy?
Yeah, I think I would take a kind of a hybrid approach, if you will. I think it would be appropriate because I think, like you said, the single casino shops, there are a lot of them, and they make up a large number of this percentage of this 1,250 in the U.S. And they need tools as well because they have challenges when they can only afford one person. It's an operational challenge. So providing a tool to them that they could use to make it more efficient would be, I think there's a lot of value in that. So I think that you focus most of your resources and effort on those those upper tiers, while at the same time, I think it makes sense to build a base of those lower tier clients. And they talk to each other, right? So I think once you start getting some of those clients on board, you'll start getting referrals. They like the product.
Yeah, that makes sense. And another advantage in that same vein would be a lot of this talent that was raised in Caesars, especially on teams like Ben's that were larger and well managed, they start spreading out, and you'll see them at tribal properties because tribal properties are willing to pay more money for Vegas talent, right? And so you might go in as a manager and there's a small team, but you know how to do a lot of things and you've seen a lot of things. And so you might go from making $60,000 or $70,000 a year to $100,000 a year, $120,000 a year. So there's incentives for people to leave Vegas and go to California to a card club or something like that, or a tribal casino and step up in a managerial position. And so there are these interconnected networks throughout the casino space that cross between the larger commercial properties to the smaller properties as well, at least in the anti-money laundering space. What other questions are there?
So the scenario you shared with Ryan earlier, the black diamond thing, like if you were to do that today, what are your chances of success? Or is that or are those days gone?
Those days are gone. I've retired from that business. He's asking Yeah, we don't like to share too many details of how compliance is conducted and all that for obvious reasons. But that was just one extreme example. There's plenty of patterns out there.
So you good at predictions?
Predictions?
Yeah.
I don't know. So?
I want to know if you will share your prediction for which one of your customers will be your first paying customer.
That's a good question. I think we have a really good chance at Golden Entertainment. And then there's another really interesting property that Ben brought to my attention during a phone call last week. And so I'm really excited to explore that with him. So I think maybe one of those two, that would be my prediction. The fun part about anti-money laundering compliance, like my career, I've hopped from industry to industry, and a lot of the principles of anti-money laundering are similar. So you can jump across these verticals. And so it's interesting to see how all of these employees have ended up in different places. That's given us really deep relationships across the industry that we'll be able to draw upon. So a really good example is at Caesars, I had three managers during my time there on the various teams I served at. One of the managers now runs the compliance program at Golden Entertainment. And so their analyst is just thrilled about the software. Every time I talk to her, she's like, how's it going with this really important work you're doing? And she's really excited. And her manager I'm hoping to have a conversation with really soon is Alistair, and he used to be my manager at Caesars, and he runs their compliance program now. So there's these familiar relationships. Another example is one of my really good friends was a senior level analyst at Caesars, and now she's a manager at William Hill, one of the largest online gaming organizations in the world, like a $2 billion company. And her boss, the head of compliance, was my manager on the investigations team at Caesars. And so we have these close relationships, and Ben even has more than I have on the executive level. You know, most of my network is on the analyst and manager type level, with a few people in executive positions. But, you know, Ben has deeper networks, obviously, from his role on these at Caesars and throughout his career and his resume and everything, his experience. So it's really exciting to kind of tap those networks and kind of see who's interested in coming on board in the early stages. I think one of the challenges is who wants to test the waters first. The screens look pretty and people are excited about it, but people also get nervous about new software. And so I'm excited to work with Ryan and the sales team here and Ben to be able to get the messaging right and be able to approach these conversations in the right way so we can instill that confidence and make this happen.